Hello everyone, and welcome to my presentation. I'm Jennifer Bairner, the Illicit Finance Lead at the British High Commission here in Port Louis, Mauritius. I'd first of all like to thank the Mauritius Africa FinTech Hub for inviting me to speak to you all today and celebrate this great event, bringing together people from around the world who have an interest in FinTech. I'm not a FinTech specialist. My specialism is in prosecuting crime, and I'd like to talk to you today about some of the challenges in combating financial crime in the digital era. I think it's impressive that we're all here today from all around the world joining online, and if we were to think about this maybe 5 or 10 years ago, people would think we were all a little bit crazy. And so in terms of financial crime, I would just like to begin with sort of recognizing that in a world of finite resources and ever competing priorities, how do we ensure that there is a proportionate response to financial crime? And despite the fact that I join you today as a prosecutor, I will suggest that the response does not lie with law enforcement, but in terms of everyone here working together and looking at this as a holistic issue. So what is the appropriate prevention response? How do we protect the citizen, the business, and the state? How do we prepare to deal with threats? And finally, and only finally, how do we pursue those responsible for committing these crimes? Now, it was once said that financial crime is a forgotten crime as it doesn't bang, bleed, or shout, that it is a hidden crime, when in fact you will be well aware that is anything but. It is happening on a daily basis right now in front of all of us. The impact of financial crime may not always be obvious, though it should be. It is said that nowadays people are more likely to be the victim of fraud than of any other crime. Any other crime. A recent British crime survey found that in the last 4 years, fraud, financial crime, made up 1/3 of the total crime across the United Kingdom. And fraud was the largest standalone crime type. So as adults here today, we are more likely to be the victim of fraud than any other crime. And on that basis, I would like you to think about whether or not financial crime and the fight against financial crime is given the resources that it deserves. So financial crime is multifaceted, it's multinational, and very often it is invisible. Again, going back to the bleed, bang, shout. And that makes it harder to combat, harder to identify, and much harder to measure. However, its impact is felt in many ways. It is felt by those forced into labour. It's felt by the victims of sex trafficking crimes and the gangs who organise them, who launder their profit through the financial system. For those devastated by the transnational drugs trade, the cost is catastrophic. The International Labour Organization estimates that over 40 million people are the victims of modern-day slavery today. Despite this, financial crime is often seen as victimless, a faceless crime only impacting on big business and even having benefits to some, such as cheaper goods and services or access to those recreational drugs or other illicit goods and services. But the impact affects us all. At a national level, revenues lost through financial crime mean that governments can collect less tax revenues, impacting on vital public services. The direct impact is fewer schools and hospitals have been built. And we have all seen how scarce resources have been during the pandemic. What could that money have done in each of our countries, in each of our communities? And the impact is felt by every community, wherever you may be joining us today around the world, due to the criminal activities and terrorism that it funds. Governments, businesses, and ultimately the public, you and I, the consumer, are paying a heavy financial cost. The industry is spending billions trying to prevent, detect and disrupt financial crime. Yet every year we see even greater amounts of money disappear as a result of money laundering, fraud and theft. And that leads me on to my next point. No one really knows the value of financial crime. No one can put a sum on it. People will say 1.3 trillion US dollars. Others will say other proportions of GDP, but we don't know because it's immeasurable. And the true cost is not just the direct financial cost. There's the social aspect. There's the impact on advancement. The money that business is using to prevent financial crime could be going on business development. Governments pursuing this, people frightened by it, are holding back our advances, particularly in relation to FinTech. So when we look at the precautions, the millions, the billions spent, is it worth it? So I'll take a simple example. Banks have put systems in place to prevent incorrect transactions. I moved to Mauritius around about 18 months ago, and I inherited a phone number which clearly belonged to someone who has a local bank account. Every day, and probably during this call, I'll receive an SMS alert from the bank warning me of a transaction. This is a process that's been put in place at great cost to the financial institution to protect the customer. And the person who used to own my phone number makes significant transactions of significant amounts of money. But that protection that has been put in place for them is not being used. Who is responsible? But also, there's another aspect here of, is there a know your client feeling here, and that the bank has the wrong telephone number for what appears to be a very worthy client? Have we come to accept financial crime, both from a consumer point of view, a business point of view, and law enforcement? During the period of this address, although it's only 20 minutes, you will all have received multiple emails, spam or phishing. Your IT systems will probably have been targeted. But unlike other crime types, we have almost come to accept that this is the price that we pay for instant connectivity. And should we? What is the acceptable cost of doing business when it comes to financial crime? How much is acceptable to you as the consumer or as the business? And whose responsibility is it to tackle this? When I think back to when I first opened my first bank account, I didn't have to think about what safety the bank had to look after my pennies. The bank was responsible for securing that money. So is it the bank's responsibility? Is it the financial industry's responsibility? You make the profit, so why shouldn't you shoulder the risk? Is it me as the consumer's responsibility? How much responsibility sits on my shoulders? Or is it government? Should government and law enforcement regulators be taking responsibility to prevent or pursue these types of crime? And this is where I'll get on to the true challenges of dealing with financial crime in the digital era. It will come as little surprise to many of you that the justice system in many, if not most countries, is still living predominantly in the analog era. We deal with bits of paper. That's what we do. The traditional occurrence book, the physical presence in police stations across the world, is battling against cryptocurrency and the blockchain. We're a human-based reactive system fighting with the machine. And then we have the challenges of data protection versus data sharing. Where is the balance of privacy versus prevention and the pursuit of crime? So I'm going to give an example of where law enforcement and business is fighting back to try and tackle financial crime in the digital era. And one of those examples is the United Kingdom's Joint Money Laundering Intelligence Task Force, the JMLIT. This is an innovative model of a public-private partnership sharing information that has generated very positive results since its inception in 2015 and is considered internationally to be an example of best practice. If we are to target high-end money laundering schemes, which are complex, multi-institutional, multi-jurisdictional, then a forum to share information on real cases, but also new typologies, existing vulnerabilities, and live tactical intelligence is essential. This partnership, bringing together financial institutions and law enforcement, helps both. By having access to instant intelligence and information, we can track those who seek to perpetrate those crimes. But we can also, as law enforcement, help business in the other aspects of it. Businesses don't want to be recognised as being part of the problem. You don't want to be associated or even complicit in financial crime. The penalties now being enforced around the world are significant. Therefore, this model of sharing information, which until a few years ago was unthought of, provides a win-win solution to both law enforcement and business. And when we come to FinTech, there's little doubt that advances in technology, the emergence of FinTech, and the growing use of cryptocurrencies and other forms of payment, instant payment, present the public and business with unprecedented opportunity, new customers and new markets. But, and as the prosecutor, I must say but, this opens up space to those who wish to do us harm. The new age of financial crime, one characterised by constant complex interconnectivity, undefined geographies, poses a significant challenge to the traditional, and I must say analogue methods of regulation and enforcement. E-wallets, digital currencies and apps that enable individuals to send money over mobile networks bring financial services and access to financial services to consumers in ways thought unimaginable just 20 years ago. My ability to send funds instantly overseas when I have forgotten about a friend's birthday or I want to support a fundraiser has meant that despite being thousands of miles away from home, I can still retain that personal connection and I don't become that friend, we all have one, who's always forgetting about birthdays. However, the speed of moving of money increases the challenge to law enforcement. Whilst it may be said that crime has become much easier to commit, it has also become far more difficult to protect, prevent, and pursue those crimes using traditional methodology. Because criminals now have even more methods to make, move, and conceal the proceeds of their crime. Because whilst these FinTech entrepreneurs have been advancing in their technology, the criminals have also responded creatively to the advances in technology. However, and I appreciate we are nearing the end of the day, all is not bad. The criminals' reliance on technology can be good for us in law enforcement. The ability to prove and show the profit from crime, the money trail leading directly to them, the digital trail of evidence is helping. Advances in technology mean that data examination is much quicker. The volumes of data from one device 5-10 years ago would have been nigh on impossible for law enforcement to examine properly. But now, using artificial intelligence, using technology, we have the ability to analyse and assess that data in ways that we never would have been before, particularly with the current resources that are available across the world. The cross-border nature of this type of crime, grand financial crime, necessitates better international coordination. Initiatives such as the International Anti-Corruption Coordination Centre bring together leading law enforcement agencies together in one room to support the instant sharing of information and intelligence in a way that would have taken months, if not years, before. Will the digital footprint replace Sherlock Holmes's classic footprint? Technology is also keeping people safe. Those SMS notifications that should be going to the correct customer should be a safety net for customers to spot illegitimate transactions. And as I come to the end, I'll go back to my point at the beginning about financial crime, and it doesn't bleed, bang, or shout. Does the penalty for financial crime fit the crime? Europol have estimated that only 1% of criminal proceeds generated in the European Union are confiscated by relevant authorities. Do we all collectively treat financial crime with the seriousness it deserves? Or do we need it to bang, bleed, and shout a little more? So in conclusion, technology cuts both ways. It is a vector for crime. It has made it easier to commit crime. I can move money instantly, but it's also a tool for preventing and detecting crime. But tools are not enough on their own. People make the difference. Innovators building in the preventative mechanism in the latest FinTech to protect the consumer, business, and ultimately the community are essential. Business operators, no tech will ever fully replace the human aspect of managing customer due diligence, identifying the thing that just doesn't feel right. We need educated and informed consumers. And finally, we need law enforcement, the prosecution, and the judiciary that are equipped, informed, and enabled to properly tackle this criminality with the seriousness that the harm necessitates. Thank you very much for listening to me today. I hope you have enjoyed what I've had to say, and I hope you take away from this that it is all of our responsibility to tackle financial crime. Thank you very much.